YouTubers, and welcome back to the Independent Investor. Today I'm going to be talking about a different asset class, and that's preferred shares. It's not a market I trade too frequently in, but occasionally opportunities do come up. Last year there was a good opportunity as the oil prices traded down. The whole preferred share market in Canada dropped, and this took down preferred shares in companies that weren't really related to the energy sector. So some of the Canadian financials and telecommunications. So I actually bought quite aggressively because there seemed to be a bit of a mispricing in the market, which doesn't happen very often. And I ended up selling them out because the capital gains kind of outweighed the dividends. So again, I came across two the other week looking at a TD Waterhouse report, Canadian Utilities and TransCanada Corp. And Canadian Utilities, the symbol is CU, typically for preferred share. The ticker is used, so CU, and then .PR means it's a preferred, and then another dot, and that's used as series. A lot of these large utility companies issue quite a few different series of preferred shares. Canadian Utilities is paying a annual dividend of $1.31, and that works out to a dividend yield of over 5%. So you can see that here. You want to kind of get the technicals right. I bought here at 24, just over 24.80. It did kind of turn around and has gone up, so long as it stays above my average cost line here, I'm kind of happy, and I can receive a good dividend of over 5%. The second one is TransCanada Corp. It's the probably one of the largest pipeline utilities, gas, oil pipelines. They're also into the electricity market. They own or lease a big part of Bruce Power, and its symbol again is the same as the ticker, TRP, and then .PR, and the series I bought was .J. Again, paying a dividend of $1.38, and if you divide the share price into that, when I bought it, was 5.14%, and we can see here the price has kind of moved up a bit. It's been in a pretty tight range, but my average price is $26.50. This is a simple thing, but I like to do it. I do put the average price on there, and I just kind of want it to stay above. So for example, if TransCanada's price was to drop $1.38 below what I paid for it, then my total return for the year would be zero, because the capital loss would have taken away any dividends. So usually with these, I initially buy a small position. You're never too sure. You're never going to just get the bottom, so you kind of wait. It did drop below, and then it recovered, and then actually I bought just a little bit more. And then maybe a month down the road, I might do the same again. But if it started to trend down, get towards my average price, I would probably start liquidating. If it got right to my average price, I would probably liquidate right away to protect any of my income I received. Again, it could spike up or down, but these typically, because they're more of an income play, do stay not quite as volatile as say the stock. Also, I think now might not be too bad. The dividend yield is quite good. I mean, it's probably twice what you could get in a comparable dividend. It's really hard now to get a dividend yield above 5% with the companies that are fairly big and safe. Both of these are rated there's two rating agencies for preferred shares. The S&P, which most people have heard of, and DBRS. So on the DBRS, these are preferred rated number 2, which is satisfactory credit quality. The only one above that is 1, which is superior quality, and it goes all the way down to 5, which is highly speculative. So, and then default at the end. And the S&P rating is similar. So these are fairly high quality rated, as they should be. They're big utility companies. And there's some other features that's nice about preferreds. They're, like I say, they're kind of in between the bond and equity market. They trade on the equity market, so you can quickly buy and sell them. The bond market's a little bit more difficult to do, as it's set up more for larger financial companies, and typically when I do buy bonds, I look for an ETF or something like that. So, and they also, you want to make sure they're cumulative, which these are. That means if the company did get into some financial straits, that it did stop paying its dividend to its preferred shareholders, then before it can start to pay the dividend, restart paying the dividend for the equity holders, it has to pay those dividend payments that were missed. So again, that gives you a bit more protection. And also, if a company was to go bankrupt, typically the bond holders are paid out in what's left of the corporation. If anything's left, then it would be preferred. And then at the very end, the equity traders, shareholders are paid what's left, which is typically nothing, and the share price goes to 0. So it gives you a little bit more protection. These also are redeemable, so you have to be, the TransCanada I think is redeemable 2021, slightly below where the price is now, but that's quite a ways out. And the Canadian Utility I think is redeemable at 26, but again quite a ways out. So you got to be careful if they're redeemable, say a year out, and the price they could be redeemed at was lower than what you paid for, then you could end up taking a bit of a capital loss, and that's going to affect your yields. But on the report, it does show you the yields, if the redeemable yield, if it was to be acted upon. So I just consider these, actually right now, the way the market is, just a good place to put a little bit of money out of the equity market, and also not in the bond market, with the equity and bond markets both being very expensive. So anyways, hope you enjoyed this video. Again, I'm not a financial advisor, so do your own research. This is just a commentary on investments I'm making that I think are pretty sound. But again, any investment has risk associated with it. So anyways, thank you. And I'll probably put a video on the weekend, a bit of a weekend update on some things, seeing the commodity market, especially copper. So I hope you tune in for that. Thank you.